Hello, this is Dave, and welcome to Equity Story. And it's Thursday, and this is just a general share advice and not personal advice. And well, you're impressed. I got Thursday right.
You did. That's a good start. Come on, let's
Wolf,
keep it going.
and I'm going to be gone. I told Wolf I'm taking my first break for 10 years.
I
I'm
know.
going away on the end of November, not long, Wolf, to Thailand to see my brother with my wife. I'm going with my wife and my kid, right? So
Yeah. No, it's not going to be about your wife. It's going to be about the kid.
well, yeah, I know.
Look
I know.
out.
But my brother lives there, and he's got this Thai girlfriend that's she wakes up in the morning, she massages his back, she cooks him his food. And you know what, Wolf? He told me about his whole life story, and it's exactly the same for me here in Australia, except the only thing is it's the other way around.
Is
I'm
that?
I'm the one that gives the back massage and that cooks the food and goes to work and says, so maybe when I come back from Thailand, you might see a guy walking around Sydney with a Me Too sign. That's me. That'll be me.
I think maybe you're a little bit jealous.
But that'll be no. That'll be me. That'll be
Oh,
me.
I want massages too.
Yeah, well, I'll give you a massage, Wolf. If you get us some winning stocks, no problem. Anyway,
I can't give you a winning stock today. In fact, we're going to have a look at a loser that's looking pretty sad today, but let's work this out.
all right. Can I just mention a stock, right?
Yeah.
That I picked up off doing my research. NVO, right? You know why we like this one. The dietary. There's a company called MCK, right? McKesson Corporation, right?
All right. Okay.
And they are this, if you look at the company, there's sort of everyone's got strong buys on them, but they're a dominant player in the drug distribution. They've got roughly 35% of the market, but a lot of people don't know the company. According to this guy, he said adding that specialty pharmaceuticals, including the dietary drugs, account for roughly 35% of the company's earnings. So they're one of these companies that's a big. They're doing very, very well distributing these dietary drugs, Wolf. Now, I mean, it's a $66 billion company, but if somebody wants to play this new dietary product that's obviously doing really well, maybe it's another option to have a look at.
Fair enough.
They're cheaper. They're trading at 17 times and slightly less than what the average is on the American market.
Okay.
So just a little idea. I mean, got why not?
Yeah, no, fair enough.
Lot of red. Everyone's negative. Type to.
Fair enough, Dave. Fair enough.
Right, and I'm positive. Even, I mean, Whitehaven buying BHP's assets.
I know. I mean, it's probably a good deal for WHC. I mean, they're talking it up, and of course, the markets has taken it pretty positively. And they now are going to be much more skewed towards metallurgical coal, which is, I suppose, if you're going to have a good coal, that's the good coal, right? Because obviously that's used in steel industry and so on. So from that point of view, certainly makes sense for WHC. I think that's going to be a skew now 70-30, metallurgical versus thermal. So look, I think, if you believe that coal's still going to be around for some time, then for sure, WHC's done the right thing.
Right. Okay. So, and again, like we talk about, it's like the new tobacco. I mean, it's more or less, it's very hard to get money to.
Well, how? Okay, let me just try to say it again. How on earth are we ever going to win ourselves off metallurgical coal when it's used and needed in steel production?
And the other issue, I mean, it's hard for anyone to raise money for a coal project, right?
Yeah, well, of course. That's why I suppose buying something already then production-wise and everything like that makes perfect sense. All you do is take it over and make sure that it still works, and you can maybe improve it, right?
Yeah, definitely. I mean, I just think it's interesting when you're looking at a company or a section where you can maybe make some money in this market. This coal is an interesting product.
Yeah.
Wolf, I'm going to move to TLX because everybody's going to be asking us now.
Mhm.
I'm certainly not technically. I'm not worried about that. So I'll have a look at it tomorrow, Friday, see what it
Yep.
looks like.
Yep.
It doesn't bother me.
Mhm.
Fundamentally,
Fundamentally, I like that, but let's talk about why the market's looking negative. So there's probably two things. One is probably missed expectations from the brokers, right? What they're expecting revenue wise. Second of all, market does not understand the story because what they saw at the beginning was going from zero revenues to 50 million revenues to 100 million revenues. So they were growing by almost 100%, almost quarterly basis. So now the growth slowed down to 11% on a quarterly basis. So the market's going, oh, if they don't obviously understand the story, they're going, oh my God, 11% only. But again, you've got to understand what's actually happened here. So they've taken a product to market and they've been very successful at it very quickly, where they've taken it from zero to pretty much a pretty decent chunk of the actual addressable market, right? So if you look at the presentation today, there's still room to improve it, but I think the total addressable market in here is about, I think they're talking about 1.5 billion bucks, and on the current numbers, 130 million quarterly, right? 130 million a quarter, let's call it, times 4. That's already gives them $500 million in revenues on that one product alone. Okay, so they're penetrating this market pretty significantly already. That is unheard of. I mean, that is pretty good action, right? That you can do that, but maybe the expectations are a little bit higher. But for me, it's never about it's about the growth, saturating, bringing other product on board, and I'm happy with the ride. So part of that journey is seeing these short-term fluctuations from here. When you look at the numbers, also they've improved the cash flow. They kept the margins, improved the cash flow, so they've added more cash to the kitty on the back of that, and they've had another product had a successful not launch, but first preliminary look through, right? So there's a lot to like about it. And if you look through the presentation today, holy moly, there's a lot of things happening, right? Like I said, there's products that could potentially double, triple current revenues. You've already on track for $500 million in revenues. You can probably expect that to go maybe to 600 million, right? Over time. So for me, I think people are just missing the point completely with this story, but it is what it is. It's hard to understand what the value should be of this. So it's going to be fluctuating. It's looking disappointing when you see price action like that, but like I said, it's early days. Hard to get our head around what this should be worth. And I suppose also there's a lot of traders in there probably just don't know what they're doing.
right. Also, surely, Wolf, it's the way this company grows its revenue, growing its earnings, it'll be doing distribution deals, right? And it depends on when those deals click in as well, right? So they most probably started off with a big bang, maybe getting a few companies really marketing it, and then they have to find more companies to market and more. So you're going to see you're going to see this type of revenue growth. Surely, it's very normal, right?
Yeah, well, like I said, the early easy money has been made. In other words, new product coming on market, it's been accepted pretty quickly by the users, the hospitals, whatever, right? And then, of course, the growth slows down. When you start to penetrate the market significantly, you get a pretty significant market share. There's only so much you can grow as quick, right? So the growth naturally slows down to it. And this is where the market needs to understand that. You've got, for this particular product, that's the market for it, right? 1.5 billion, let's say. The next product they've got, it could be another $1 billion to 1.5, 2 billion market, addressable market. So, then they've got a number of products on track to be possibly used and approved by the FDA. So, like I said, I think it's just a matter of time, education, understanding, and getting comfortable with the story. But like I just think the market at the moment is still trying to come to grip with it. They didn't see that massive growth that we had a little bit earlier, and this is what happens. But like I said, I'm not worried. The only problem I've got, of course, is because I've used the CTM. I got to make a decision here at the end of the week.
All right. Okay.
Just what it looks like on the monthly, by the way, just the TLX, just having a look at it on the monthly, because again, I think maybe thinking about it, this is much more, I think, a monthly story than a weekly story, because you're going to get booted out many times, possibly, if you're going to be using the weekly because of that.
Well,
nature of the story.
Well, monthly, if you go monthly, it's fine.
Anyway,
right. Yeah, it could go.
Just a thought. If you want to smooth out the volatility on a weekly basis, because look at it. I mean, it does go up and down, right? Above the trend line, below the trend line, above the trend line, below the trend line. You can get very frustrated with it, but if you look at the monthly, you'd probably be in there the whole time with no issues. Let's move on to the next one. Another one that's delivered okay, but the market went no.
It's hard, isn't it, to work out how much of this is the market today? And
I think there's a bit of the market today for sure, but also when you look at Hub versus net wealth, there's something about Hub that seems to be doing better. So I think when you've got 2 or 3 players in the one space, Dave, there seems to be, let's go on to the best horse that can win. So the people that are maybe in PPS or net wealth, they just go, now we get better look at Hub is the better story. That's the problem I have on some of these sectors. We've got 3 or 4 players.
Look, I'm looking here. Funds under management increasing 1.7 billion, and the stock goes down. I mean, management must be scratching their head a little bit. I mean,
look, I think a lot of people are scratching their heads, but it is what it is right now, right? The markets are very volatile, so that's definitely one part of the equation.
All right, corporate travel.
Mm-hmm.
So again, down, and I mean they are negative. They are below the trend line, which is a little bit surprising in this market for the travel industry, Wolf. But they had they said basically they're on track for consensus growth.
Exactly. So tell me why is it going down? Can you please explain?
Is there anything in the outlook?
No, that's what I've said. They've reiterated the guidance. So you tell me if this market is rational and knows what they're doing in a lot of these cases, especially on the on the smaller scale companies, outside of 200. Unfortunately, you get those moves, and that the travel industry is still robust, Dave. When you buy a ticket for the first time in 10 years to go overseas, and you pay what $10,000 to go to Thailand, that it's still pretty good, right?
Yeah, it's like.
So it is interesting, isn't it? It's interesting, but you've got all these factors that are maybe outside of its control. You've got all these Middle East powder keg. You've got all these issues in the US, and then you've got the markets dropping like a stone last night in America. So it's just not working for some of these companies. That's the problem.
All right. Again, it's like a funeral procession here, Wolf. With bloody red. So you've got Patriots, some more high grade. Actually, I'm looking at it, it's not too bad. 2.46.
If it's brilliant results.
2.86, 2.7, 2.79.
Yeah.
And
this is. I mean, grade-wise, it's extremely strong, right? Grade-wise is extremely strong. Maybe the thicknesses are not brilliant, 10, 12, whatever meters, but grade-wise makes it up for sure.
Well, it just adds to the product. But anyway,
it's below trend. So I think probably the sentiment here at the moment, like I said to you last few days, it's below.
Well, lithium, lithium's on the way down. That's the problem, right? So, and you've got what Goldman Sachs saying it could go down another 40%. ARB.
Yeah, interesting with ARB because they come out with an update today talking about 10% growth, right? Obviously, markets are so bad sentiment-wise that matters not, Dave, that they are back to growth again. I suppose maybe it's not cheap still, right? So if it's trading on, let me just have a look. So it had a pretty poor year last year. It's trading on 27 times, back to growth, 10% growth so far, but the market says no. So there you go. So this is how tough the market is at the moment.
NXL had their annual general meeting.
Yep.
Why did you want to talk about this one, Wolf? Because they don't often. What do they put in their annual general meeting that's sort of?
Yeah, normally AGMs are the updates to see how they're going.
Yeah,
that's what AGM is good for. They update investors about the progress, the last quarter.
Yeah, and what was it? What do you like about it?
Well, they've reiterated the target of growth this year. Remember when we started looking at this, when we went that green candle above the blue line, right? That's when we sparked the interest for us saying, hang on a second, guys, they actually back to growth again. So 3 months later, they're reiterating that, saying, yep, guys, we are on track for what we said on that green candle that you liked so much. We're confirming that's exactly what's happening right now. We are going to hit those targets 3 months into the financial year.
Excellent. So what? Okay, so what would you value this company at?
Hard to say at the moment because it's still on a recovery phase. I don't know. It's a good question. It's a good question. I'm not sure how much I put value on it, but I think there's still value in it because it's coming off $6-7 and it's still $1.44, right? So it's lost a lot of its value and it's only just working itself back up again. So in a normal market, it's probably worth much more than it is right now, but we'll see what happens. But at least the initial recovery phase on the back of that, we are back to growth. It's intact. It's just the market again, function of the markets right now.
But if you look at the market cap here, Wolfie, you got Avatar, was it 189 million?
Yeah.
And you've got the market cap at 461.
So on a revenue basis, it's cheap,
isn't it?
Someone could easily come and take this out. Probably private equity again will probably come knocking.
All right, we'll see. All right, MAU. Good looking chart at last. And magnetic resources. Is it as magnetic as the name?
It's not bad. It's not bad. So more drilling results, which are quite interesting. 100 and something meters at 2 grams, right? Which is very good, very, very good. They've already got. I had a look at it. They've already got about 600,000 ounces at about 1.44. And this lady, Julie North, right? And I know the actual MD, George Sakalides. I used to we have contact with him, and I remember him from Perth days, and he was a very, very nice dude. So, and he had some success previously. I tell you what. So I actually don't mind him as an operator, as an MD. So I want to follow as an explorer. Because they can easily get to 1 million ounces, and then you've got a different kettle of fish. So look for a gold story that you're looking for growth in resources, drilling results. Definitely one to have a play with.
All right, just wait to the end of the week. If it looks like that, then possibly a buy. Wolf, Santos.
Yep.
Again, it's a horrible market, holding up reasonably well.
Probably because of the oil prices. So it's another one of those results are okay. It's the function of tensions in the Middle East, oil prices going up. SDL would say holding on pretty well.
All right, XREF.
Mhm.
below trend. In a good market, would that been good enough, that announcement, to get them back above trend? Or
The growth is slowing, right? So, you can understand that the profit taking, the sell off from that $1.40 about 2 months ago to $1, because it's had a pretty stellar run, right? And now the market just wants to see where they're at. So they've come up today and saying, yeah, okay, the growth is stalling. It's still pretty good, 10% revenue wise, 15% profit wise. So from that, still good. But if the commodity space is slowing, then potentially these guys can slow as well. So yeah, revenue 8%, sorry, and profits 15%. So look, it's still decent, and there will be a time for it probably to still play with it. But right now, below trend, you can't, can you?
no. Well, it's definitely not a monthly story, that's for sure. LBL laser bond. It's actually not a bad looking chart, this Wolf.
Yeah, I've actually been putting a little bit more work into this. I just wanted to mention because they came up with the update today, which seemed pretty good. It's actually a family-run company, which I like because they obviously care a lot about this companies, their own babies. So yeah, I'm going to put a bit more work into it. LBL, it's trading on about 20 times. It's not a bad little story in its space. So it's above trend. So there you go. You've got the cash flows in. But so look, it's been improving almost on a quarter to quarter. It's cash flow positive. The interesting bit for me, right, is say that they're trading on 20 times at the moment with about 30 something million in revenues. They're looking to get to that 50 million in revenues by 2025. So that puts it on, let me see, another 30% growth, maybe even slightly even more over the next 3 years. That's excellent. That's why I'm interested in this. It could be a nice little story to have in your portfolio over the next 3 years. And they give a dividend. So let me just have a look what they actually on right now. Could be one of those very well run,
about 20
small Aussie caps.
Yeah, dividend small. Well. Dividend is small, but trading about 20 times.
Yep. So what is the dividend yield? Have you got it on yours?
Yeah, it's only 2%, less than 2%.
So look, a little bonus of a dividend in there, but it's more about the growth. If they can hit that 2025 target, which they said in that presentation they can, then yeah, it's pretty interesting.
Again, Aluka, Wolf. Yeah, I mean, it broke trend, I suppose, like you said, when the prices started going down, and it still looks
there is no cure for your commodities going down, and unfortunately, there's nothing you can do about it, Dave. Nothing. And as a result, down she goes. I mean, there's unfortunately double whammy here for Aluka, and that is mineral sands prices, and there's a lot of China, of course, demand, whatever, right? And remember they were going into rare earths, and rare earths, unfortunately, you can see by LYC that hasn't been going great either. So down she goes. But you know what? There'll come a time when this is going to be looking great again, and you're going to have a great trade somewhere along the line. But right now, doesn't matter how good the company is, doesn't matter what incredible announcements they come up with. Down she goes because the commodity prices are weak.
AQZ of the takeover or the merger with Qantas not happening. I've held up quite well, Wolf.
Yeah, because they gave a sweet note in the bottom of that actually announcement saying, well, the merger didn't go ahead, but they give us 4 more, I think. We sent 4 more leases, wet leases with Qantas for some of our planes. So that's nice. So I think overall still pretty good. 3rd airline in Australia, I think. But again, it is below trend, so you cannot play with it for the moment. So it's pretty bleak. I mean, we've gone through the whole thing. It's pretty bleak. You can see, TLX is the one that stands out, down 17% now. I just want to see how it obviously finishes it by the end of the week, right? To see what the brokers say, were they happy, were they not happy. I mean, that's like I said, I'm not going to jump at shadows here because the market does follow what the big brokers say. So if the brokers had a much higher expecting growth rate for this quarter, then I suppose that's how the market reacts to these things. So we'll see. If we have to get out, we have to get out.
All right, and another little gold play. I mean, the stories that are looking good are gold, and that EMR. If it looks like this, it's got a nice little buy signal. So that stock is looking pretty good actually, Wolf. So EMR, I think you're starting to see some of these gold plays look a little bit better. It is actually, there's Northern Star break up above trend. And that gold play that you found today, I think that MAU,
yeah, it looks pretty interesting, doesn't it?
Yeah, it looks pretty interesting. So, and I think Whitehaven looks good. And I think importantly, don't panic with TLX. There's nothing, according to fundamentals, that are wrong with it. It's just trading.
Nothing wrong with it. It's just expectations possibly. And let's just read what they say, right? Yeah, tomorrow. It is a complex business. It's one thing we're going to understand. And I think a lot of investors probably don't understand. But it is what it is. That's the market we are at the moment. Any maybe bit of disappointment because they didn't quite hit expectations are going to be harshly dealt with the market.
On that note, Wolfie, thank you very much. And looking forward to tomorrow live at 12. Thanks, Wolfie.
Right. Cheers. Bye.